Gold has had a good start to the spring season, the month of April trading well above last week's close. But there are clouds overhead, and the shortened Easter week saw Thursday close the week with a bearish outside reversal, which doesn't bode well going into next week. After 5 good days of a sustained rally and a higher time frame downtrend, the question now is whether this rally has the strength and conviction to take it higher. Thursday's outside bearish reversal now provides the framework for next week's price action. All eyes will be on if it is able to test the bar's high or bar's low. This will reveal gold's next intention. In today's gold technical analysis, we break down exactly what's happening. You'll see the higher time frame structure, the key levels that matter right now, what volatility is signaling, and the 3 scenarios that could play out next. Welcome back to Bitcoin Capital Gold. If you are investing in Bitcoin or gold, knowing when to scale in and when to defend your position is critical. Bitcoin Capital Gold is built for investors who want clear, no-nonsense analysis to make rational, confident decisions. Market structure is the foundation of everything we do here. It maps price movements, trends, and the battle between buyers and sellers. And from that map, the path of least resistance becomes clear. We always focus on the higher time frames because it gives us context, cutting out all the noise of individual bars. Starting with the yearly chart, our current all-time high for gold was made on 29 January 2026 at $5,627. We see that both the trend and swing direction is up, with the last structural yearly swing low at $1,618 on 3 November 2022. It would need to break this level for the uptrend to be violated, so we can safely say that yearly uptrend is structurally intact. On the monthly chart, we have the trend up, but the swing direction down. The last monthly structural swing low was made on 14 November 2025 at $2,541. The monthly structure is intact. Our weekly chart is telling us that the current trend is undecided, with the swing direction down. The prior structural low on 2 February 2026 at $4,284 was broken, and a new weekly structural low was established at $4,100 on 23 March 2026. On a daily basis, the picture is undecided. The trend is down, but the swing direction is now up. On a daily basis, we must trade with the prevailing uptrend until proven otherwise. We do have in our mind last Thursday closed the week with a bearish outside reversal. While indicators look back, price action looks forward. It captures the live battle between supply and demand and tells us what the market is doing right now, not what it was doing 3 candles ago. April has started strong, but so did March. Similarly, March produced a bearish engulfing reversal bar and spent the rest of the month going down. April has produced a high with a bearish engulfing candle, so will April follow the same pattern as March and push much lower? Our high of the week and the April monthly high is at $4,826 on 2 April, and that low of the bar is at $4,580. Next week, we'll use this bar high and low to get a quick indication of who is in charge, the buyers or sellers. If the buyers are in charge, we have resistance overhead, which we will discuss next. If sellers are in charge, we need to break the daily swing low of $4,348 on 26 March. This will give us an early indication which way gold wants to go. We must respect that on the weekly we're trading in a downswing in spite of the current up rally, which means we do expect at some point buyers will roll over and die. If the daily swing can be violated, this gives us a clue as to gold's future direction. The structural low is at $4,000. This is the main downside test. Markets move in patterns driven by human psychology, and Fibonacci zones map those patterns with precision. They show us where buyers and sellers have historically made decisions, giving us a structured edge over those reacting to price alone. Last week, we had 3 levels of resistance at 4,700, 4,900, and 5,400. However, the nearest level at 4,700 was broken as gold pushed higher. We now have just 2 levels of resistance. The first Fibonacci resistance zone is sitting between 48.56 and 48.63, and the higher zone between 53.61 and 53.85, anchored by the March high. The downside Fibonacci support zones remain unchallenged. That sits between 42.08 and 42.29. When volatility expands, the market is telling us something important. It measures the speed and force behind price moves and gives us a read on market sentiment that pure price direction alone cannot provide. From the weekly perspective, ranges are going down from 571 to 501 to 381. This is telling the strength isn't there. March exceeded the prior monthly ranges with a value of $1,334. When we look close to the open, the weekly is reflecting the small gains that buyers have made, with the last 2 weeks pushing up from $42 to $160. Whilst the monthly range has expanded, the direction has no conviction as yet. No market moves in isolation. By layering in the macro backdrop, we add a wider lens to our analysis, one that reveals how connected markets are influencing the picture and what that means for future price action. Crude oil had a great springboard from $100 with a strong bullish engulfing bar telling us that buyers are firmly in charge. The price is just below $112. The last daily low is at $96.50 on 1st April. The US dollar index is ebbing up and down the $100 coin. Currently, it is trading up, having found support at $99.30. We expect DXY to have a strong push up as money flows into the currency. The Nasdaq is in a clear downtrend, and $24,000 is the area of battle. We've had 5 weekly lower lows now. Bitcoin continues to work the range between $60,000 and $76,000. It has found resistance just above $69,200 and is currently treading water. The USD JPY pivot number is 160. Although we are below 160, we made a low on 1st April, and from that low, price has found support and is now pushing up. 160 is a critical level for Japan and could result in intervention. The geopolitical situation for now remains uncertain, and the markets are reflecting that uncertainty. Structure, price action, Fibonacci zones, volatility, macro, we have built the full picture. Now the most important question: what does all of this tell us about where price goes next? Scenario 1. Buyers push higher. Having broken the $4,700 level, for gold buyers to continue their uptrend, they must test $4,900 and $5,000. These are levels they must break to be in a strong position. Scenario 2. Range continues. Price is trading between the round numbers of $4,400 and $4,800. If it doesn't break out of that $400 range, then we are experiencing compression. Scenario 3. Support fails. Gold is being supported by $4,200 and the structural low of $4,000. Sellers would need to push it to these levels to assert their authority. Before we close, here is a clear summary of where we stand: the higher timeframe structure, the critical price zones, the volatility signals, and the most likely scenarios from here. Key takeaways: gold has started April strongly, rallying well above last week's close. But Thursday's bearish outside reversal bar is the signal to watch. Next week's price action will be defined by whether buyers can hold above that bar's low or sellers push through it. The higher time frame structure remains intact. Yearly and monthly uptrends are in place. The weekly swing direction is down and the daily has turned up, creating a tug-of-war between the short-term rally and the prevailing weekly downswing. The key level to watch on the upside is the Fibonacci resistance zone between 48.56 and 48.63. The $4,700 level has already been broken. On the downside, 43.48 is the first line sellers need to breach, with 42.08 to 42.29 the Fibonacci support zone and $4,000 the structural floor. Volatility is not confirming the rally. Weekly ranges are declining from 571 to 501 to 381, signaling the buyer's lack of conviction. The macro backdrop adds a further caution. DXY is pushing higher, the Nasdaq is in a clear downtrend, and the USD JPY is approaching the critical 160 level, where Japanese intervention becomes a real possibility. Three scenarios define next week. Buyers clear 4,900 and push toward 5,000. Price compresses between 4,400 and 4,800, or sellers reassert and target 4,200 and ultimately $4,000. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.